Welcome to the Deep Dive. We're here to take a whole stack of information, like this week's Mining and Metals review, and really pull out the key insights for you. Think of it as your shortcut to getting properly informed. So today we're looking at the week of August 10th to 16th, 2025, in the mining and metals sector. Lots going on, as always, but it feels like one metal is still really the main story. And policy changes, they're making some pretty big waves. Okay. Let's dig in.
Absolutely. And, the striking this week is just how much copper continues to be, the center of gravity. Our sources all saying Copper is really the enduring linchpin here. Just look at Antofagasta. Their first half performance was really strong. EBITDA up around 60% year over year. That's about $2.2 billion.
Wow, 60%.
Yeah, and they lifted their dividend, guided CapEx higher for the Centinela concentrator. They're aiming for over 30% copper growth medium term. It really shows you something important. Capital is chasing those tier one, low execution risk copper projects.
Right. It's not just any copper project getting funded.
Exactly. It's that de-risked growth people want. In this kind of uncertain climate, investors are prioritizing reliability. Makes sense. These established plays almost become like a safe haven within the whole commodity space.
That's a great point about de-risked growth. We hear about capital chasing projects, but what about totally new investments, new partnerships, like that Hudbay and Mitsubishi deal? Copper World in Arizona. Is that just another deal, or is it saying something more?
Oh, it's definitely saying something more. Mitsubishi taking a 30% stake, funding 30% of future equity calls. That's a $600 million joint venture. It's a clear signal, I think, that Japanese trading houses are still very much hungry for copper offtake and project exposure too.
So securing future supply is key for them.
Absolutely. Long-term diversified supply chains. That's becoming critical with all the, focus on resource security these days. And speaking of supply, quick update on Codelco's El Teniente mine. It's partially restarted after that accident, end of July. Good news there.
Partial restart? So not fully back online?
Not yet. Several sectors are still shut, pending inspections. But the immediate drag on copper output seems moderated for now. Just reminds you, even the giants face these operational hiccups. And then looking east, Adani's new smelter in India, Kutch Copper. It's a big one, 500 kilotons per year. And they're applying for an LME brand.
LME brand that's important for global trading, right?
Crucial. It certifies their copper for the London Metal Exchange. Big step for them. And the goal is to trim India's copper import bill. Interestingly, Codelco's been flagged as a potential concentrate supplier. Shows you how these global trade flows are shifting.
Okay, so even just within copper, there's a lot happening. Strong performance, new JVs, supply issues, new smelting capacity. If you had to boil it down, what are the really critical things our listeners should keep watching?
Good question. Definitely Codelco's ramp-up cadence at El Teniente. How quickly, how smoothly did they get back to full capacity? That's key. Also, keep an eye on social risk in Peru. That's always a factor. Yep. And China's refined output levels. Plus, any spillover effects from tariffs, those are the big ones.
Right, tariffs. That brings us nicely to the policy side. It feels like government actions, especially in the U.S., are playing a much bigger role now. How is policy really reshaping things?
Oh, profoundly. I mean, here's where it gets really interesting. We're seeing major U.S. policy moves. First off, there's about $1 billion being rolled out for critical minerals and materials.
$1 billion. Where's that going specifically?
The Department of Energy is targeting it pretty strategically. Battery supply chain stuff, rare earth recovery from waste, and also processing and alloying for strategic semiconductor inputs. It creates a very supportive environment for domestic mining and those midstream projects. It's about building resilience, securing those chains.
And you mentioned tariffs earlier. Are there new ones coming? What's the impact there?
Yes, and they're significant. The U.S. is widening steel and aluminum tariffs. It covers over 400 derivative products now.
400.
Yeah. Effective August 18th, we expect some serious knock-ons from this. Downstream metals demand, pricing, trade flows, it'll all be affected. Beyond just the immediate price effects, this could really accelerate that trend towards regional supply chains. Companies might have to seriously rethink where they source and make things.
But is there a risk these tariffs could backfire, maybe make U.S. manufacturers less competitive if their input costs go up?
That's definitely the balancing act.
Yeah.
It's a valid concern. The goal is boosting domestic production, but you don't want to make the end products too expensive. It's a complex trade-off. We'll see how it plays out. And another big policy piece, targeted sanctions. These are hitting parts of the DRC's illicit minerals trade.
The Congo, specifically.
Yeah, the U.S. targeted a specific militia, a Congolese cooperative, and actually 2 Hong Kong exporters. They're all tied to coltan flows from Rubaya, a notoriously difficult area for conflict minerals. So for anyone buying tantalum, tin, or gold, this is a major compliance watch item.
Yeah.
Due diligence just got even more critical. If we connect this to the bigger picture, what you're seeing is all these policy tools, funding, sanctions, tariffs, they're actively reshaping everything. Compliance, economics, the midstream, across copper, REEs, steel, aluminum.
It really feels like a structural shift.
It is. Governments are setting new rules for the global resource game.
Okay, let's broaden out a bit then. Beyond copper and these big policy moves, what else caught your eye in metals and mining this week? Gold, lithium.
Sure. Gold sector M&A is still humming along. Goldfields looks closer to buying Gold Road. That's about $3.7 billion. It would give them full control of the Gruyere mine. Shareholder vote set for September 22nd.
So more consolidation?
Yeah, the market commentary is spot on. Gold stays consolidation heavy, especially that mid-tier rationalization happening in Australia. You have to wonder, is it just cyclical or something more fundamental restructuring the industry? Maybe cost pressures, need for scale.
Interesting. And battery metals. How did Sigma Lithium do? That market's been pretty volatile.
Sigma had a pretty decent Q2, actually. Output was up 38% year over year. And crucially, their all-in sustaining costs, AISC, came down, impressively, down to $594 a ton.
That cost figure is key, isn't it?
Absolutely. Their shares rallied, even though revenue and net loss weren't maybe stellar. It just underlines how much cost curves and discipline matter right now. It moves these lithium stocks week to week, sometimes more than the top line. Shows the market's maturing, focusing more on efficiency, maybe less speculation. And on rare earths, a quick note, American rare earths. They produce their first oxides from Wyoming or in some pilot work.
First oxides, so early days, but positive for domestic supply.
Exactly. Early stage, but it's a positive data point for domestic REE processing efforts. A step towards, less reliance on traditional suppliers. Oh, and briefly, coal. Peabody's big metallurgical coal deal decision, that a $3.78 billion deal, is due August 19th. There's some noise around arbitration risk, though, because of a price adjustment clause triggered by a closure at Moranbah North. So, something to watch there.
Okay, so bringing it all together, what does this week's deep dive really tell us? Copper's dominance continues, clearly. But maybe the bigger story is just how much U.S. policy is impacting supply chains, trade. And we're still seeing that consolidation, those strategic moves in gold, lithium, other areas. Geopolitics and industrial policy seem just as important as market fundamentals now.
I think that's right. And this raises an important question, doesn't it? As you see governments stepping in more and more with funding, tariffs, sanctions, and you see capital still piling into specific things like copper. What does this week tell you about, the future shape of global resource security? And what does it mean for industrial supply chains going forward? Something to really consider, how these shifts might affect material availability pricing for you in the years ahead.
That's a really key question to ponder, cuts right to the heart of it. Thank you for joining us on this deep dive. We definitely encourage you to keep tracking these crucial developments.